4th.
And talking about blasting off, that leads perfect intro to gold, right? So today hitting a record intraday high so far of 1594, closed up about 1582. Record settled yesterday. Huge move up, 1.4% yesterday. You don't want to chase the highs here, right? So I'm assuming for the GLD, you're holding off.
As a trader, if you're not involved right now, you shouldn't be buying this up open.
Okay.
I bet you some traders are going to try and fade it, considering the move that we've had in the last week. If you take a look at the GLDs, you did have a lot of nice entries. Okay, you had this reversal right here that some took into support. This was the investors buy the dip. Then we held higher, and then some traders played a breakout, including guys in my office, as we cleared this trend line. We had follow through yesterday. We're opening higher. I would say if you are long a tier 2 or tier 3, sell into this gap. And there are going to be some traders that try and acute short versus the high, considering, we just went almost, $100 in gold in about a week and a half?
That was 70 maybe, but yeah,
something
a lot.
like that.
All right, so let's go to the miners because they're slowly now starting to provide some kind of leverage, and they're really moving now. And Scott, speaking with a lot of analysts over the last few months, the miners have just been bad. I mean, case by case, sure, but in general, they haven't providing that, 2-to-1 leverage, 3-to-1 leverage that we've been seeing. They might not even actually provide that leverage because the GLD has been taking their business.
Right.
If you're an investor, you want to get exposure to gold, you can now buy the GLD versus a miner, which is really risky, but that doesn't mean they're not going to move. And I'm pointing to Goldcorp as the number one here because that did provide some 3-to-1 leverage yesterday, up about 3% compared to gold.
The analysts have been loving the space, and they've been scratching their head, why hasn't it started to go yet? And in here, we're like, once they start going, you better be there and you better be fast. So that's why maybe test as they're just sitting around, but once they ignite, you go after it. And look how quick GG moved yesterday. Okay.
So have you missed that move then? If it moved too
I don't
fast?
think so. Well, you missed these 2 days.
Right.
This was your tight pattern. This was resistance. This is where traders would have gotten involved. Then you had nice follow through. We are now back to these old highs. What I'd like to see is I'd like to see it go a little sideways, give you a little pattern just like we saw here before it makes new highs. And if this were to make new highs, you'll probably see the group get a lot more attention. You'll probably see traders, investors start saying, what could go next? Let's get some catch-up plays, because if something's leading, then you get some more in the group that come along for the ride.
But as we saw in the first quarter reports, is that investors are very specific now and very choosy as to what stocks they're going to pick. They're not just getting into the entire sector like they were at the end of 2010. And Goldcorp's been one of the golden children because they've actually met their expectations, which are very high, which is very impressive.
Yes.
They're supposed to grow about 60% over the next 5 years. And if you look around, Q1, if you look at the chart, that's when it had its pop. It was after it reported. Reports late in July. One stock that wasn't so lucky was Agnico Eagle because they missed production in 2010. Stock got really hammered. I actually overheard a shareholder talking to someone from Agnico being like, you really screwed us. You really grew too far, too fast. What are you going to do to change it? What's the chart saying to you?
What's the symbols there?
AEM.
Oh, there you go. Sorry. AEM. This I actually like from a trading standpoint because you have a downtrend here.
Yeah.
Okay, you have accumulation over the course of the past 4 or 5 months as it, I guess, tried to regroup when they disappointed. Now it's coming into a level here. I guess if they do follow through with their obligations or with their estimates, above 66.50 or 67, you can get a pretty good move to 70 to the moving average. If you look on a macro level, it's obviously not leading. It doesn't look like GG considering where this high is, but there is at least a tight pattern here, and here's a point of reference for an entry if this group starts to really get going.
And perhaps some of the catch-up plays that you were talking about. All right, let's just round it out real quick with Barrick because it's the biggest gold miner out there, but it just really hasn't been doing that much. I was speaking to one analyst who said that, over the last 10 years, Barrick's issued a lot of shares to be able to expand, and that it's taking a while for that to shake out of the market. It doesn't have to do that anymore with its recent acquisition of Equinox. It actually paid for it in cash, so we know that the shares won't be added to right now, but still it's not one of the sexy ones, right?
You know what? They're not sexy until they get going. And right now, this one still, like you saw the other chart, it's at the bottom of the range. It did clear this lower pivot, so it's on its way. It's in front of a moving average. It's well off the highs. This isn't a quality. I'd give this about a B plus, if anything, out of the group. But it could get back to this, 52 area and maybe at the highs if this group gets going. Yesterday would have been your nice entry, though, just for a technical trade.
I just want to point out that the gold price is going to have to rise faster than oil prices and input costs. So we have to watch that because as gold's going, so is oil. So you have to be sensitive to that, also hurting profit margins. All right, we will be back with some stock trades for today right after this.